Oil prices have kicked off 2024 in a bearish pattern, but with increased tensions in the Middle East, let's see how the commodity has been performing lately. Hello and welcome back to our channel. My name is Daniela. In today's video, we are going to be looking at oil prices. Just doing a quick recap of what's happened over the last few days, because not much has changed fundamentally. But of course, we do have those tensions in the Middle East with now the attacks on Yemen increasing. So before we get into it, please like this video, comment, subscribe, turn on your notifications. And if you have any questions about the markets in general or trading, don't forget to leave them down below and we'll try and get back to you as quickly as possible. So as I was saying, oil has started 2024 with a bearish formation. It seems like demand pessimism is once again taking over. We've got those concerns about weaker economic growth in the next 12 months that seem to be dominating the playing field. Now, as I said, we have seen escalation of attacks in the Middle East. We've seen the US and Britain attack some areas in Yemen over the last 2 or 3 days. And of course, that has increased those concerns about wider escalation of the conflict in the Middle East region. So far, the impact on oil prices has been limited. We did see a spike higher on Friday as news of those attacks from Britain and the US made light. We saw about 4% gains on the back of the news for oil prices, both US crude and Brent. But we quickly saw that momentum unwound, coming to end the session pretty much unchanged, as we'll see in the chart in just a second. As I said, so far, the impact on oil prices has been limited. Now, of course, the attacks in the Red Sea were the main reason for the US and Britain to get involved. Now, the attacks on the Red Sea come on the back, of course, of Israel's attack on Gaza, on Hamas. Now, the retaliation effort seems to be continuing. We have seen these Yemen rebels actually come out and say that they expect, or for Europe and for the US and Britain to expect retaliation from these attacks. We have seen the US carry out more attacks on Sunday. Of course, news of that coming and supporting oil prices. But we just haven't seen that pick up in the risk premiums that you would expect from the escalation of tensions. As I said, the impact so far limited because the attacks on the Red Sea have caused some tankers and some vessels to divert and go via South Africa to get to Europe. And of course, that puts added time costs to the cargo. But we really haven't seen an impact on the cargo itself yet. We do still have that flow of oil coming from the Middle East region towards Europe. So far, the impact has been limited, although if we do see it move more to the Arabian Peninsula, we do expect to see more retaliation for Iran and Saudi Arabia to start to get involved. That is when we could see the greatest impact on oil prices. So nonetheless, so far, as I said, the impact has been minimal, but it does put a short-term floor under oil prices. We are seeing that gives them some little bit of momentum. But the fact that we are seeing weakness in oil prices, even though these concerns remain, does allude to the fact that the market seems to be struggling to come to terms with that bullish pattern in oil prices, seeing a reversal. It's expected that throughout 2024, we're going to see prices hovering around current levels, consolidating as we see normalization. And in fact, we've seen a few investment banks coming out in the last few days, Barclays and Citi being two of the ones that have come out and actually reduced their price forecast for both Brent and WTI for the year, basically citing the fact that we started the year with higher than expected inventory levels, and also the risk of looser cooperation between OPEC plus members to normalize the excess capacity, to normalize the spare production capacity, given that the cuts from 2023 to supply have been extended to this year. So all in all, we do have this bearish pattern continuing. It looks like oil prices are going to struggle to find any reason to push higher unless we see these concerns about conflict in the Middle East increase. So let's jump onto the chart now to see how it's been trading. Okay, as you can see here on the West Texas Intermediate WTI chart, the struggle that we've seen to build those gains higher and reverse that bearish momentum. The RSI is a good example of that. You can see since the beginning of the year, we struggled to push above that midline, that 50 line, struggling to reverse that bearish momentum and to consolidate higher. There have been some good attempts in that time. We have seen those daily gains for WTI, but they've been quickly reversed lower. And the momentum, the feeling is that bearish momentum continues to have the upper hand. Now you can see here on Friday's session, after news about the attacks on Yemen broke, we saw that strong positive momentum here for US crude prices, up around 4%, but you can see coming to end the day lower there from the open, and also leaning into bearish momentum today on Monday. So again, even after having a catalyst or a reason to build those prices higher, we're just struggling to see that follow through in prices. Now we know the $75 mark has been a key resistance for WTI in the past. Of course, on Friday, that once again evidencing it. But we've also got the moving averages stacked against price here on the upper bound. We've got the 50, 200, and 100 day. So it's showing that even if we do have that short-term bounce to break those resistances up ahead, there is a lot to watch out for in terms of barriers as the price moves it higher. So all in all, it's giving that feeling that price is likely to consolidate from here, just really struggling to find that bullish momentum. But also on the downside, we do have that support on the back of the escalations in the Middle East. As I was saying, this ascending trend line here from the beginning of the year actually shows that since then we've had higher lows, which is actually a positive sign, a positive signal for that short-term momentum, but we're struggling to take it anywhere, to see that follow through. And that, of course, is that leading to a little bit of indecision. So we've got that longer-term descending trend line from the highs back here in September that has been slowly lowering those highs, but also that short-term ascending trend line, which is coming now to kind of an area of a funnel here where we have that play of power to see which momentum dominates. As I said, expected to see throughout most of 2024 just a consolidation around current prices, let's say between $70 and $80 per barrel for US crude. But of course, the tensions in the Middle East could provide some further momentum. But realistically, we're thinking about it fundamentally, both the supply and demand side are pointing lower for prices, for oil prices. So right now, the short-term floor is pretty much being provided by those tensions in the Middle East and how that can affect oil prices in the future. So not really any clear direction right now. The RSI bang in the middle here. So a clear picture of indecision. It's just a case of who's going to have the upper hand and what is going to be the next news or catalyst to provide a direction for oil prices. That is it for today's analysis on oil prices. Thank you so much for watching, and don't forget to subscribe to our channel.